20th year, your purchasing power at 6% a year, oh my gosh, it's down to $2,900. And if you go to the bottom of the right-hand column, your purchasing power after 30 years at 6% inflation, and trust me, we've been having 6% inflation. They've just been lying about the numbers. Okay, they can lie about them and they can have their official numbers all day long, but what affects you is the real world numbers. And after 30 years of 6% inflation, you're down to about $1,562. You've lost 85% of your purchasing power. And guys, that's exactly what happened. We saw the dollar drop just about that far in the last 30 years. In the last 30 years, since 1971, actually last 35 years. To survive U.S. inflation and make ends meet, the U.S. middle class has taken on the greatest debt load in U.S. or world history. And now the U.S. middle class is maxed out on their debt. How many more things do we need? How many more gadgets and whizzes, and video sets and everything you can imagine do we really need? At some point, don't you just have about enough? My wife and I, we come back from the third world. We spend about half our time out in the third world working with our orphans' homes. And every time we come home and we look around our house, we realize, my gosh, we could get rid of 50, 60, 70% of our stuff and our junk and never even miss it. And one thing is sure, we don't need any more stuff or any more junk or even any more cars. Okay? And a lot of Americans are now in that position. So the government has killed the U.S. middle class with inflation and taxes. And now we have some people that want to come into the White House and want to raise your taxes more. And I heard them on television the other night, two of them. The two Democratic candidates both said that they would raise capital gains taxes. Do you know what that's going to do to an already weak stock market? Whomp. Okay? Americans will live with high and rising inflation for the rest of their lives. To survive and prosper over the next 10 to 20 years, they must have a majority of their assets out of the depreciating U.S. dollar and at least in part in gold and silver. And that's some of the practical things we're going to talk about in just a minute. When considering gold and inflation, remember that in 1980, gold peaked at $875. Some of you were around, were invested in that at that time, and remember. But in 1980, inflation-adjusted dollars, gold will have to reach $2,300 just to be even with its 1980 high. So just above 900 today, gold is still cheap. In the 850 to 950 range, gold we think is very cheap indeed. This is the most incredible chart I think I've ever seen. I've been in the investment business for 40 years. For an incredible 40 years. And I tell you what, I've never seen a chart like this. This is total deposits, borrowings of depository institutions from the Federal Reserve, and you look, that chart was flat from 1985 up until the present. I don't think I've ever seen a chart go up vertically like that. That is everybody running to the Federal Reserve trough to borrow money, and that tells you how bad this financial system really is. An incredible chart. And this chart simply shows you that gold has to get to close to $2,300 to be even with where it was. I believe gold will go to $2,300, and because of all the things we've been talking about here this evening, I think it will go to probably $3,000 or $4,000 an ounce. But that only means that maybe you're protecting your purchasing power, because a lot of other things are going to be declining in value, especially your dollars. Gold is the world's premier monetary and chaos hedging asset. As we've described, gold responds directly to financial economic turmoil, to geopolitical tension and war, to virtually any kind of uncertainty. Reasons gold is headed much higher: global subprime mortgage meltdown, derivatives meltdown, too much spending in the U.S. and globally, too much money is being produced, rising global inflation, the weak U.S. dollar, international tensions, especially in the Middle East, China's explosive growth, and also in India. Gold, silver, oil, commodities, and other tangible assets, where are they likely to go? Well, they all rise together. This is the silver price. Silver, of course, is rising along with gold. This is the commodity index. It, too, is rising all over the world. We're now back in an era where tangible assets are in and paper assets, including stocks, bonds, and mortgages, et cetera, are out. And that's going to be true for some years to come. Commodity price index going up 20% a year. That will continue. Okay? Look at the price of wheat. Look at the price of soybeans, of corn. Corn's going to keep going higher and higher because of the boondoggle that our president has brought us with the ethanol production, et cetera, et cetera. That is just another government boondoggle that won't work, and it's not going to solve the financial crisis, but it is helping to exacerbate the global food crisis. You know, there's food riots that are now taking place in countries around the world. This past weekend, the government of Haiti was overthrown because of food shortages and incredible food prices. You know what's happened to rice? Rice went from January 1 of 2006, rice went from $245 a ton. About a week ago, rice hit $880 a ton, except in some parts of the world, some kinds of rice are close to $1,000 a ton, but at $880, that's a 3.6-fold increase in the cost of rice. 2.5 to 3 billion people a day eat rice 2 to 3 times a day. Everybody we know out in Asia, everybody at our orphans' homes, that's what they eat. They eat rice, lots and lots of rice. Rice is cheap, but it's not cheap anymore. It's not cheap at all. And so you're going to have food riots, you're going to have governments toppled. Let me tell you something, this kind of thing eventually will produce wars. So global inflation, food price inflation, unbelievable. We're moving into a major food crisis. Crude oil prices, I've already shown where they're going, $117 a barrel. Do you know that almost every point that oil was rising, Wall Street was telling people that it was all over, it was going back down. Wall Street, don't they ever get it right? Don't they have any capacity to join the dots? My answer is I don't think they do. Okay? So commodities, global commodities are rising together. We're back in the era of tangible assets. They are contracyclical to paper financial assets for at least 2/3 of the cycle, and they will rise with rising global inflation and interest rates. Over the past 7 years, gold has risen 312%. That was to its high a month or so ago. It's a little lower than that now. 312%, which was only about 44.6% per year. Silver has risen 425%, which was only about 60.7% per year. So, of course, all of your stockbrokers rushed out and got you to get into gold and silver, right? Don't answer, please. Gold stocks have risen over 800%. The Dow Industrials, S&P 500, and Wilshire 5000 have been flat since 2000, except the NASDAQ is down about 45%. Now, yes, they've all rallied a little bit in the last few days. They will rally up and down, but you just look at the broad general trend and see if anyone is making money in the stock market today. The U.S. dollar, as we said, has dropped about 40% against the dollar index of other currencies, 45% against the euro.